Do you still think that the interest rates are too high to buy or sell in this market? If you do, I'm Elisa Rice with Keller Williams Realty Gulf Coast, and I can completely understand. But I want to explain to you a way that you can make things work in the current market, either as a buyer or a seller. We know or have heard that interest rates are dropping this year. When and by how much is a mystery to us all at the current moment. So, as a buyer, your real estate agent may be saying, go ahead and purchase now. Find that home that you love and you want to live in and refinance later once the interest rates do see a drop or a decline. As a seller in this marketplace, you may be feeling the pressure to possibly reduce the price of your home or the listing price of your home in order to attract some additional buyers to view the property and to make offers. There are ways that could benefit both you as a buyer and you as a seller on the same transaction in the current market. So let's talk about one, and that is an interest rate buy down.
An interest rate buydown is a concession to a buyer that reduces their interest rate and monthly payment for a certain period of time. This example is a 3-2-1 buydown. So if you're the buyer, you reduce your interest rate and monthly payment for the first 3 years of home ownership by 3% the first year, 2% the second year, and 1% the third year. So let's take a look at an example here. So if we're looking at uh, a purchase price of a home at 330,000, which happens to be around the average here in the Pensacola area, and you're looking to put down a 5% down payment, and your interest rate is somewhere around 7%, then your total monthly payment, now granted this is without taxes and insurance, would be somewhere at this $2,086 range. So this is with no buy down, no price reduction, nothing. When we take a look at just a price reduction, so if you're a buyer and you're wanting to make an offer on the property, just to say, let's cut $25,000 off of this price. Uh, Here's where you can see how the 3-2-1 buy down versus a price reduction is really going to come into play for both you as a buyer and if you are a seller, how this even benefits you. Okay, so if you've offered a $25,000 price reduction, then the purchase price has reduced to $305,000. So the total monthly payment for you as a buyer is reduced by $158 a month. So you would have uh, a cost to the seller of $25,000 because the seller is just flat out reducing the price of their home by 25,000. So the monthly savings is pretty minimal for the amount of price reduction, and you have a pretty substantial cost to the seller as well. If instead of just going for a complete price reduction on the sales price of the property and instead have a 3-2-1 seller buy down, what that means is, as we said, the first year the buyer is going to have a reduced interest rate by 3%. So if we were originally looking at the 7, we are now down to 4, which is a monthly savings of about $589 for the buyer, and that's for the entire first year mortgage payment on the property. The cost to the seller for a 3-2-1 buy down is all an upfront cost. So uh, their their dollar amount would be $14,376, which is actually going to come from the amount of savings over those 3 years each month. So the 14,000 comes from $589 a month savings over 12 months the first year. And as we go through, the $403 of savings in the second year each month. So multiply that by 12. And then finally, the third year of a 1% savings. So a $206 amount savings per month times 12 months in the third year and add all of those up. That's a total amount of $14,376, which is a savings to the buyer and the cost to the seller. When you take a look at that compared to just the $25,000 price reduction, you're getting $158 per month savings. Um, as a buyer, obviously that would be across the full 30-year mortgage payment, but the cost to the seller is 25,000. So this is a win-win from both a buyer and seller's perspective. As you move to the next year, you can see that as the buyer, you would be saving $403 each month. And then finally, the third year, $206 each month. Now, after the 3 years, your interest rate as a buyer is going to go back to the 7%. But the great part is that you can finance, or I'm sorry, you can refinance the home at any point during these first 3 years. So, as we know, interest rates are expected to fall throughout this year, which means that if the interest rate falls below the 4%, the 5%, or 6% that you would be paying during that year, you can refinance and you can use the money here, the 14,376. You can use the funds that you have left in this account paid by the seller to refinance to that lower interest rate payment. So, this is really a great opportunity for buyers to get in at a lower rate than what the current interest rate is, and gives you the opportunity to refinance as we know that the interest rates are going to continue to fall. You, as a buyer, if you're someone who has had your home on the market for a while and you're feeling the pressure of reducing your your price of your home in order to attract more buyers, this may be a way to save yourself some money that you are going to, let go of anyway in order to sell your property. In lieu of a price reduction, make an offer for a 321 buy down. And you can see that you do save yourself a substantial amount of money. Of course, depending on your loan type and the amount of money that you are financing, there are limits to the amount of concessions or buy downs like this that may be offered to the buyer. So be sure to consult your agent and your lender to make sure that everything is going to work out appropriately for you. There is other types of buy downs. There is like a 2-1 buy down. So very similar to this situation, except you're only looking for savings over a 2-year period instead of a 3-year period. So a 2-year would be 2 percentage points on year one and 1 percentage point on year two of your interest rate as a buyer. Thank you so much for listening today. I hope that this provided you with some great information to think about if you were still thinking that those interest rates were too high to buy or sell in this market.